Hello everyone out there. How are you all doing? I'm Kate Hill, bringing you the best unbiased and honest content on property, along with fantastic hints and tips. Today, stay tuned for all your latest property news. The big news items in real estate continue to be soaring rents, rising interest rates, and rising property prices. Apartments and house rents across the country have been rising, with wages lagging behind. The median weekly asking rents for capital city units increased 22.2% in the year to March, 6 times faster than wages. Unit rents increased more than 6 times faster in Sydney and Melbourne, where the medians jumped by 24% and 23% respectively to $620 and $480 per week. Median house rents rose 13% across the combined capital cities. Perth had the largest increase at 14%, while asking rents rose 10% in Sydney, 11.1% in Melbourne and 12% in Brisbane. Despite the increasing financial burden, many are taking a positive approach, moving in with family or flatmates to reduce their costs or opting to become homeowners. It is also a chance for people to consider opportunities to look for cheaper properties that can better fit their budgets. People are changing the type of property that they want to rent and changing it to a less expensive property like a townhouse or an apartment. Westpac senior economist said Australian tenants were facing strong competition for homes. No shit, Sherlock. Returning migration was adding to already strong demand amid a time of lower supply. The Reserve Bank of Australia once again raised the cash rate, its 12th increase since May last year. While many speculated a halt in rate rises, it increased by 25 basis points to 4.1% when it met on June 6th. According to ratecity.com.au, the most recent rate rise will cost the average Australian homeowner an additional $70 a month. RBA Governor Philip Lowe says that the move is necessary to try and control inflation. Inflation in Australia has passed its peak, but it is still too high and will be for some time yet before it is back to the target range, he says. This further increase in interest rates is also to provide greater confidence that inflation will return to target within a reasonable time frame. While Lowe says that there are signs the economy is slowing, inflation is still far outside of its target band of between 2 to 3%. But he says rising rates and higher costs of living mean that household spending will slow, which will help ease inflation. Historic low levels of stock throughout most property markets means that property prices are once again rising. CoreLogic's National Home Value Index shows that the pace of house price growth accelerated to 1.2% in May, its third consecutive monthly rise since March, while PropTrack's Home Price Index puts the increase at 2% across the combined capitals for the year to date and says that in May, values went up by 0.33%. PropTrack says that the rise in prices seen so far this year gathered pace in May, broadening and accelerating across a lot of markets. They say that sellers are benefiting from the reduced level of competition with other sellers, while CoreLogic says that advertised listings trended lower through May, with roughly 1,800 fewer capital city homes advertised for sale relative to the end of April. Inventory levels are 15% lower than they were at the same time last year and 24% below the previous 5-year average for this time of year. Just think about that. A lot fewer listings. The big banks are easing back on their mortgage wars and are calling time on big incentives for new customers. But while cashback will no longer be on offer, one major lender, Westpac, is offering another carrot to those refinancing by easing its serviceability buffer to just 1% for borrowers with good credit histories. Currently, APRA, the Australian Prudential Regulation Authority, requires banks to include a 3% buffer when assessing a borrower's capacity to repay. The buffer is in place to ensure that borrowers can meet increased payments through rate rises. Although APRA has said there can be exceptional cases where borrowers do not fit the standard approval process. It says in these circumstances, its standards don't stop banks from lending to those borrowers. APRA will continue to closely monitor economic conditions and says, should risks to financial stability change, APRA will adjust its macro-prudential policy settings accordingly after careful consideration and consultation with other agencies on the Council of Financial Regulators. Now, I will keep you posted as always throughout the year on all things property throughout Australia. Please give me a little like and subscribe if you are enjoying the free content. And I will see you all again really soon. Bye.